To markets now, which for the time being are trading very much in that band, very flat on the headline indices. Mid caps as usual doing a bit better. Sunil Subramaniam, Managing Director and CEO of Sundaram Mutual Fund, is with us. Sunil, hi, thanks for joining in. So, I think a lot of investors have been watching the market over the month of August and, watching it get into this consolidation patch. Now, from a retail investor standpoint, I think the question everybody has is that, are we in for a long phase of consolidation? Or is there going to be, this is basically the stage being set for a big upswing. What do you think? And what should investors really be doing right now? Long term, everybody should be investing in equities. So I'm not going there. But in the interim, given the way things are shaping up.
I think a staggered approach to equities for the next 3 to 4 months is what I would recommend. The reason being that there's a dominance of news flows and there's a lot of political developments. There's the US Fed news. So I think if you look at it, there are 3 or 4 factors which have to be studied and watched. And depending on the news flow, markets could go up or down within a band. So I think it's best to take a staggered approach to investing. The reason I say is that obviously the Fed and the expected rate hikes, one is what the market has priced in. It could turn out to be 2 or 3 would have an impact. The second is the monsoon. And the August has not been good for the monsoon. The month of September, unless there's a sharp pickup, we are looking at probably 8 to 10% below our long-term average. And to that extent, then already food inflation has been a concern. Vegetable inflation has been a concern. And if the Rabi crop sowing gets affected, then wheat and pulses, you could see that that's something which will impact RBI policy. So that's the thing to watch for. The second is the ongoing festival season. From ground reports, everybody's expecting a good festival season, but the numbers will be known only, you start with Ganesh Chaturthi and end probably with Christmas. So during the course of the quarter, as the numbers come out for the next quarter from 10th October, again, it's a period of watching the numbers around the consumption fund. Then you have the political situation around the semi-finals, if I may call it, the big state elections in the Hindi belt, which are very, very crucial as a bellwether to look at the way the national elections next year will pan out. So I think market will get focused around those exit polls and then the actual numbers and all of that, leading to some amount of uncertainty there. And in all of this is also the fact of the slowdown, the Chinese stimulus, which would also then impact oil prices, because China being the largest consumer of oil, and a tiny decline in oil prices is good for India, but then you are approaching winter when you have heating demand. So lots of interesting stuff which could pull the market either ways. So my recommendation for the next 3 to 4 months is to take a staggered approach to equities from that point of view. And in the next year, we can, I think, expect a pre-election rally in the market, which is what historically has happened.
Okay, so priming for a pre-election rally. Sunil, morning. Just wanted to get your thoughts in on chemicals, the agrochemicals company. Now, soda ash prices, for instance, after halving in 2023, prices have now started moving up. Soda ash prices are up 6% week on week. What are the ground reports telling you on other chemical prices? They've gone through a long stretch of time, price-wise correction. What are you picking up in terms of inventory, the outlook on prices from companies that you speak to?
So far what we speak is that, see, the monsoon has been a surprise to that extent. And, that has had a play on the agrochemical side, right? Because sowing and fertilizer and all of that is a function of how good the monsoon is and how much sowing take place. If the sowing is going to be below the average, then the demand for chemicals is also going to be less. So that's a factor which all are waiting and watching. So what I hear from the producers is that they're eagerly watching the monsoon and that. So there is a bit of uncertainty around that front, and it probably reflected in the prices also being volatile and slightly firming.
Okay, got that. Sunil, thanks for joining us. This is Pavitra. You said take a staggered approach to equities. Now I want to figure and understand from you, where do mid and small caps land in that list, because we've been talking to so many fund managers. All of them are saying that it's becoming too hard to find ideas in this space. Is that a view that you have as well, that, because of the kind of run-up that we've seen, there's not much left in terms of, what's still attractive at this price? Or do you think there are still pockets which look good?
I think there are still pockets. There's sector rotation. Like look at consumption, for example. Consumption has generally been a disappointment at the mass market level, but the premiumization of consumption, right? You're seeing vehicles above 7 lakhs, good demand. You're seeing high-end properties selling well. It's the entry level that there's challenge. So I think that depending on how the festival season pans out, if you see a boost in the entry-level products, you could again have sector rotation because those stocks have been, under pressure and there could be rotation. Similarly, on the mid-cap IT pack, right? If you see top-end IT has been saying that the order book are not likely to be mega this year. But mid-cap ITs are saying the other way. So if that story plays out, you could see a rally around that. Similarly, in pharma, there was margin pressures coming in earlier. Normally, in this time, the generics feel a lot of pressure. But with the news from the pharma companies is that this time the downward pressure is not so great. So pharma could take a lead. So I think while overall mid and small caps look like they have run up a lot, I think there's sector rotation which could still provide value. And that's why, when you allocate staggered to a fund manager, he will get the opportunity to invest into those sectors which are going to be the leaders in the next wave. So I think broadly, within the mid and small cap, the other thing to bear in mind is that stocks come in and out of the index quite a lot, right? So something which falls off and a new stock entering the index is again a good opportunity to buy. So there will be opportunities within the mid and small cap space to invest in a diversified mid cap or small cap fund. I think still makes sense and stagger it, as I said.
Sunil, out of time. Thank you very much for joining in. Get into a break. We'll come back and get chatting with Harish Shah of IndiGrid to discuss their latest acquisition.